the US SEC has not raised any objections to the launch of several XRP-based ETFs from ProShares. There are 3 products being prepared: the ProShares Short XRP ETF, the ProShares Ultrashort XRP ETF, and the ProShares Ultra XRP ETF. At first glance, these 3 ETFs do not directly buy XRP. As Nate Geraci, president of the ETF Store, explained, these are leveraged and inverse products, meaning they only provide exposure to XRP's price movements through derivatives, not through holding the actual asset. Geraci emphasized, all these ProShares products are leverage and inverse ETFs, not spot ETFs. Interestingly, ProShares used an automatic registration mechanism, meaning that if no objection from the SEC was filed by the effective date, April 30th, the ETFs could launch immediately. However, the actual trading start date still depends on the readiness of the exchanges and other technical factors. Geraci then raised an important question. Why was the SEC so quick to allow XRP futures ETFs, while spot XRP ETF applications from major firms like Grayscale, Bitwise, and Franklin are still pending? This has caught attention because spot ETFs are generally seen as more stable since they are backed directly by the cryptocurrency, while futures-based ETFs are considered riskier. For additional context, there is already a 2x long XRP ETF called XXRP from Teucrium, which uses a swap agreement to double XRP's daily price movement. Its assets under management have recently reached $42.79 million. Meanwhile, many investors are still hoping that the SEC will approve a spot XRP ETF sometime in 2025. Polymarket currently shows a 78% chance of approval. Especially after the SEC agreed to settle its lawsuit with Ripple, the odds look better. Coinbase and Bitnomial have also launched XRP futures contracts, which many analysts believe is an important step towards spot ETF approval. Still, as of today, the SEC has not made a final decision. They have until October 2025 to decide whether to approve or reject the pending spot ETF applications. Looking at this situation, we can see a certain inconsistency in the SEC's approach. On one hand, they're allowing more volatile derivative products to move forward, but on the other, they're delaying more straightforward and transparent spot products. So, while this is positive progress for XRP exposure, it's important to closely watch the SEC's next moves.